This chart shows the number of home sales completed year-to-date in California. Year-to-date home sales volume continues to fall back at 16% below a year earlier in July 2022 and falling. Now, compared to 2019, which is the last normal year for housing before the pandemic economy interfered, home sales volume in 2022 is 6% higher. But this year-to-date spread is narrowing with each passing month. Therefore, you can expect sales volume to fall below 2019 volume by year's end. 2022's undeclared recession has absolutely chilled buyer attitudes, forcing sellers to pivot and now compete for buyers. Property sales volume will continue to deteriorate into 2024, then rebound as end-user buyers gradually return and stage the next recovery around 2026 through 2027. Why so far out? Most property buyers, whether speculators or users, won't return en masse until they sense prices have fully bottomed. This chart shows home price movement averaged across California's major metros. The gray bars indicate periods of economic recession. The blue, red, and green lines represent price tiers. The solid black line is the mean price trend line, the historical equilibrium to which home prices cyclically return. Dashed lines are RPI's forecast. California home prices fell back in all tiers during June 2022, the result of plunging purchasing power and newfound buyer caution. While decelerating, June average home prices are still 15% higher than a year earlier for low-tier prices, 18% higher for mid-tier prices, and 21% higher for high-tier prices. This year-over-year spread is narrowing with each passing month and will likely turn negative by mid-2023. While home prices essentially exploded in 2020 through 2021, they will also rapidly implode, though less dramatically, eventually finding a bottom in 2024 through 2025. Look out for a return of real estate speculators in 2024 to provide a short-lived dead cat bounce in sales volume. A sustainable sales recovery will take off with the return of end-user homebuyers around 2026 through 2027. This chart shows the average interest rate on a 30-year fixed-rate mortgage, FRM. Mortgage interest rates swung higher in September 2022, with the 30-year FRM rate now exceeding 6%. The current upward trend in mortgage rates began in 2013, pivoting from the prior 30 years of declining interest rates. This is reflective of the historical interest rates cycle. At the outset of the 2020 pandemic, the average 30-year FRM rate had risen to almost 4%. Today's post-pandemic rise in the FRM to 6.02% inflicts a further cut on buyer purchasing power, which fundamentally controls property pricing. Watch for highly leveraged home purchases closed during the pandemic economy to slip underwater in 2023, submerged by the grip of rising mortgage interest rates and ballast of the mean price trend line.